Hello guys, it's Max here from Daily Market Movements, and just before I start today's video I just want to make you all aware of a trading signal service that we provide here. If you would like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, then all you have to do is simply visit our website at www.dailymarketmovements.com. I'm going to leave the website link below this video in the description, so if you are interested just scroll down, click on that link, which will then take you to the website where you'll see that we charge a very small fee of $199 for a year's membership. Very good value for money, I can promise you that. In front of me though is the gold over the US dollar chart, and as you can see we have had a volatile session in Wall Street today. Gold has been all over the place. We were trading quite flat at around 1765 area to 1760, and then once the US markets opened we sunk all the way down to 1750. And in yesterday's video and the previous videos before that I mentioned that we are likely now to go and retest that 1750 area, which was the previous resistance in this holding pattern that we were trading in for about 2 months, which I've highlighted in blue. We were likely to go and test that as the new floor in the market, and as you can see in today's session, just like we did back the other day, we tested that as the floor, and the bulls stepped back into the market and pushed it higher, and now we are forming a shooting star on the daily candle. So this could be the candlestick that pushes us next week towards 1800. So having that in mind, what I'm looking for going into the market on Monday, I'm looking on that Sunday evening whether we get a gap higher. Now, I've mentioned in previous videos that on the Monday and the Tuesday we do see pressure on gold and just in the precious metals in general up until the Tuesday US session. So expect to potentially see some pressure just trading around at 1760. We could even potentially see another fall down towards 1750. But then from Tuesday onwards I will look for gold to go and press towards $1,800 levels. All of the fundamentals are there for gold to reach 1800. The Fed is printing more money than ever. It's unprecedented times when it comes to printing money. Interest rates are near zero, and that's the case for most countries around the world. There's tensions between US and China, and of course in the US there's a huge uptick and spike in coronavirus cases. So all of the fundamentals are there to support gold prices trading towards $1,800. I have no interest, and when I say I have no interest, I promise you I have no interest whatsoever in selling gold. I am just simply buying with dips when dips do occur, and the only reason that dips may occur is because of profit taking. One thing I would be wary of going into next week though, which is very important, and this is once again a reason why you should subscribe to the trading signals, because there's fundamentals behind these trading strategies as well. There's not just, it's just you can't just trade from a technical perspective. You need the fundamentals as well, and that is that this month marks the end of the second quarter. So the end of June is the end of the second quarter. So what does this mean? Why is it important? Why am I telling you this? Well, it's very important because now portfolio managers, hedge fund managers, bankers, they're going to be looking at their portfolios now. And as I mentioned in previous videos as well, gold has had such a good rally this year. So what these hedge fund and bankers might want to do is maybe take some profit off the table going into next week, as it will be the last couple of days of the second quarter and also the last couple of days of the month. So you might see some profit taking, which could push gold down towards that 1750 area, just like we saw today. That's what I believe that we're seeing in the stock markets today as well. I think we're trading around about -2%, and that's just simply hedge funds and money managers taking profits off the table before the end of the second quarter. But then after Wednesday next week, so Wednesday next week is the first day of July, and that's when I expect to see a real uptick in gold, and that's when I will be buying, aiming towards 1800. So I do have $1,800 on my radar for next week, but after Wednesday. In terms of the RSI, we're currently at around 62, so we're nowhere near overbought yet. We still have plenty of territory, which will get us to 1800, as you can see, until we could potentially run into a wall where we would then be considered to be overbought, and that's where you could potentially see some selling pressure. But we'll worry about that when we get there.